Good afternoon, traders. It's Bill Baruch with Blue Line Futures. I want to share what we're looking at here today after this big move, strong close. Well, not so strong of a close. We pulled off the highs, but I'd say it was pretty firm here throughout the day. Close and indices, and I think this is a really nice move. And as the week started, I was highlighting the inverse head and shoulders pattern in the S&P, as well as we saw one in the Nasdaq. And I think the most important thing today is that the strength today broke what was a downtrend that began on April 21st in the S&P futures. You see that trend line right there. We really thrusted through that early in the session. That was mostly in the overnight. Ironically, we moved out above and we were able to close above the 21-day moving average. It actually got out above the 21-day for the first time since that happened to be the same day that trend line started, April 21st. Getting out above that 21-day moving average, I think, is starting to show that momentum can shift hands here. Maybe that we have a bottom, but don't get too excited yet. There is a lot of resistance overhead. Now, this is that gap down from the May 6th Friday close into that Sunday night gap down open. A lot of open space there. And to cover that, you're talking 41.19. There's also a retracement level, about 41.22 or so. So a lot of resistance in this region here that we could get up to. So keep an eye on that. And then, of course, you have the failure from 40.95 just last week. Again, this is great to see. I'm excited. I'm sure if you're a long or a bull, you are excited too. But let's keep an eye on the price here. And there's a lot of resistance overhead. So what's going to get us through there? First, let me highlight the Russell 2000 doing something very similar. Getting out above the 21-day. It's actually covering that gap right now too. It actually traded to the highest level since that May 6th. And that could be a little more get a little more oomph on that thing, and had a better bottom here through this week. So I think that's good. And the Russell 2000 can bottom or top, before the other indices do, given some of the high beta nature. And then the Dow did the same exact thing too. The Dow, same trend line, got above the 21-day moving average, and it's hitting right into that gap. Now, what's holding the S&P back more is that tech. So look at this. The Nasdaq, it has not gotten, these are Nasdaq futures, has not gotten out above that 21-day moving average yet. That trend line from April 21st is right overhead. So this is going to be a test in tomorrow if we can get some strength into tomorrow. And then you have that gap way above, in the Nasdaq futures. So keep an eye on this here. This is going to be the level. Now, also I've highlighted that this QQQ relative strength against the consumer staples, and we've had these thrusts through here out of it and giving us a bottom. Are we developing the same thing here? And you have a downtrend line, and the only way we'll break this downtrend line is seeing continued strength with tech being a leader through the end of the week and getting a good close into Friday. And the stocks that I'm watching most closely are, of course, the three of the biggest stocks in the world, and three of the biggest in the S&P, of course. First, I'll start off with NVIDIA. They had their earnings report on Wednesday after the bell. They traded lower after hours by as much as 10%. And they finished today with a great session, up 5% on the day. And, one thing I've been talking about in the morning note that I send to clients every morning, what I talk about today is seller's exhaustion. And seller's exhaustion, you can start seeing a sign of seller's exhaustion when there's bad news in the market and it can't go lower. I wouldn't say NVIDIA's earnings was bad. I mean, they had record data center revenue, record gaming revenue, but it was the revision for quarter two in the current quarter that they really hit the stock. But it came back strong, and we're moving above that 21-day moving average again, showing some momentum shifting hands. It has that previous lows, really the gap right there, 186 in the May 6th close, previous lows, getting out above there, this area here would be telling us this momentum shifting hands. Apple as well traded lower in the early morning before the bell. That was something too. They put out news when they released earnings a month ago, talking about an $8 billion hit to revenue due to China and supply chains. So that's something that's in the news now. It shouldn't really be affecting Apple so much, but of course it is. But Apple finished strong today. Has some room to get to 21-day moving average. It has had a bad week. And then, of course, Alphabet was crushed on the Snap news. And we'd love to see Alphabet cover that gap. I mean, getting Alphabet back up there. So we would need to see some momentum tomorrow. These are the big three stocks that we're watching closely. The Nasdaq here it is. This is the overhead range here. The 21-day moving average comes in at where is that? 12,421. The trend line really right into that range there. We need to get out above there. We get out above there. We close above there. I would imagine you have the S&P into that gap, and then the S&P's got to clear that gap. These indices have to work together and really start to show that the momentum is shifting hands. Well, we hope you have a great day on Friday to finish out the week. And if you have any questions, we're here. Don't hesitate to reach out to us, info@bluelinefutures.com. Check out our YouTube channel. We always put videos up there every day, Blue Line Futures. But yeah, don't hesitate to reach out. Shoot us an email. Check out our website, bluelinefutures.com. Good luck, good trading. And remember, futures trading involves substantial risk of loss. It is not suitable for all investors.